Hey there, I'm Bobby Jones, a retired CRNA turned apartment investor and founder of On Call Capital. Now, I wanted to take a few minutes to address a bill that has been proposed in the House Ways and Means Committee, specifically House Reconciliation Bill Section 138312 and 138314. These two provisions will affect anyone who holds a retirement account, as well as those businesses who accept IRA investors. As with many ideas that pop up in Congress, these have good intentions. The general idea is to prevent Peter Thiel type of private investments. Now, for those who aren't familiar, Peter Thiel is one of the co-founders of PayPal. Documents released over the summer revealed that his Roth IRA has a value of $5 billion. Yeah, that's billion with a B, far from the intent of the Roth IRA. Of course, Congress wants to do something about this, but the proposals that they've put together could affect regular accounts like yours and mine. Specifically, Section 138312 of the current bill states that an IRA will be prohibited from holding any security that requires the IRA owner to have a certain minimal level of assets or income, i.e., any deal or fund that requires accredited investor status. If an IRA has such securities, the IRA will be disqualified and the investor must pay taxes on the account. The effective date for this is December 31st of 2021. That's this year, with a 2-year transition period for IRAs that already hold such securities to dispose of their asset. Now, as you'll recall, accredited investors are those who have income of at least $200,000 per year individually, or $300,000 with their spouse, or they have $1 million in net worth. So for many nurse anesthetists, you might be just above that accredited investor threshold. You would not think of yourself as being affected by most of these proposed bills because there's been a $400,000 income threshold that's been batted around. The result of this bill means that accredited investors who may be far below the proposed $400,000 income threshold will lose the ability to invest their retirement money in private real estate syndications, debt deals, venture startups, and many other non-public offerings. That limits your ability to diversify outside of the stock market. This could be huge for investors who are already in such deals as well. Let's say you invested in an offering with a 5-year hold period. If that deal hasn't exited, then your sponsor will either need to exit your capital out of the deal prematurely, which limits your overall returns, or your complete IRA account will become taxable. This will artificially drive down the worth of your investments. Effects from Section 138314 are that IRA distributions will be forced on many investors whose strategy doesn't meet the new rules. IRAs will no longer be able to own an LLC that purchases real estate with limited liability protection, since the IRA owner will be disallowed from being a manager of the LLC. This places IRAs at a higher creditor risk overall. IRAs will also be prohibited from receiving Fannie Mae or Freddie Mac loans to purchase real estate, since those agencies require an LLC to be used as the borrower. Investor desire to diversify holdings outside of the traditional stock market has skyrocketed over the last few years. But keep in mind, this hasn't gone unnoticed by the companies that make revenue from that constant flow of IRA funds into public stock markets. They are working behind the scenes to reverse this trend, and these provisions are an example of their handiwork. In short, this under-the-radar legislation has never been publicly vetted and will have unintended and adverse consequences on countless Americans, and not just the wealthy, who are saving for retirement through Main Street investments. It negatively impacts the ability of Americans to save for a secure retirement by limiting choice and their ability to diversify retirement savings outside of the stock market. So what can you do? You should reach out to your elected officials today in the House and Senate to tell them that you oppose these limitations on IRA choice. Urge them to remove Section 138312 and 138314 from the proposed legislation. Down in the comments, you'll see links to other articles that give you additional content and suggested content for letters that you may decide to write. We must act quickly, but together we can save our self-directed IRAs. I hope this information has been helpful. If you have questions or comments, pop them in the comment section below. I'm happy to answer them. You can also find me on Facebook, LinkedIn, or Instagram, or visit my website at www.oncallinvestments.com. Thanks for watching, and I'll see you on the next video.